But we've taken the loan application. We've processed the loan. We've gone through the whole process. We've got it clear to close. Now we're on a home run. We're going to go to the closing table and we're going to close. Now, a lot of times in the past, they'd accept cashier's check for whatever amount of money you needed to bring to closing. Now they're getting more efficient and safeguarding, and they're asking money to be wired in. So they'll request for you to wire the money into the closing most of the time, if not all the time now. So your money gets wired, you're going to go to the closing table and you're going to close. I recommend, and what we do with our clients is we always want them to have the closing statement before they go to closing. Because on that HUD-1, which they've really done a great job, I feel, they've expanded the HUD-1. On the HUD they have your figures. So you see all the closing costs and how much money you have to bring. Well, following the pages you have a comparison of the actual cost and the good faith estimate that you did with your loan officer. It shows a comparison, how close you were, percentages. It also has on the last page the interest rate, the payment, if there's a prepay. All of that's on that HUD-1, which is great. So basically, before you go to that closing table, so you don't have surprises, you want to see that HUD-1 at least a day beforehand. You look at the HUD-1 to make sure that everything's correct. Compared to your good faith estimate, the charges are there. If you have any questions, call your loan officer, go through everything. So it makes it smoother. You get to the closing table, it'll take you about an hour to close on your transaction. Some lenders don't require anything more after that. Our lenders like to see certain documents before they'll fund the loan. They've wired their money, you've wired your money, all the money's there, the closing package is there, but now we want to leave, but you can't. The lender wants to see certain documents like the note, the mortgage, the till. They want to see certain items to make sure that they're signed correctly, that they didn't miss dotting an I or crossing a T. Once they review everything and it looks great, they provide a funding number and everything's released. The keys are given in your hand and off you go. Now, at the closing, if you have a bank-owned property, that the bank owns the property, oftentimes they do not hand you the keys at closing because they've got a process to go through where they have a mobile notary. It goes back to the title company. They get the funding number, and usually they disperse the keys and disperse the loan a day or two later. That's the only difference on a bank-owned. But that's the closing. So we went through all three parts to get you from beginning to the very end. You know, it can be a great experience. I know getting a mortgage is tough, and that people say, oh, it's very hard. But really, if you just work with your loan officers, your processors, and your underwriters, and if they ask you to jump, just jump. They ask you to hold your breath, whatever the case may be. Work with them because they're there to help you to get to the closing table. That's what we all want.